reach to the accounting piece of it, there is something which we need to understand, that what is the nature of the investment. Now, nature of investment will drive how do I account for it. Idea is, when you are preparing your financials on, what is the basic idea? That you give a true and fair picture of your financial status, correct? So if there is a risk involved, then my financials should reflect that risk, if it's a risky investment. If there is a change in price of that investment, my financial statement should give me that information.
Come again.
So investments, before you talk about accounting and all, you need to know what is the nature of the investment. Now that nature has to be considered before you do the accounting, and it should reflect, the way you're gonna account for it, it should reflect that what is the risk I have with that investment, what is the change in value, how is it impacting my balance sheet, how is it impacting my income statement. And if somebody is looking at my financial, they should get the clear picture that where have I put my money and how are they doing, how is that money doing. So all of this accounting and all determined based on my type of investment and my intentions, and why did I invest money in that kind of say instrument. So first and foremost, there are guidelines given to determine the nature of the investment. These are only guidelines. You have to specifically look into each investment to determine their nature. So guidelines given are, one is percentages investment. So if you are buying like a 0 to 20%, these are, as I said, these are all just guidelines, okay? You have to still look into specific cases. So 0 to 20% investment hai, it's considered as passive investment. I don't play much of an active role because the amount is very
0 to 20% of what?
Of the overall let's say worth of that company. So if there are 100 shares, I bought only 20% of it, still a passive investment. Move on from 20 to 50, they call it as active investment, but it's still a minority only, because minority is less than 50%, right? And there is this important term there which is called as significant influence. Again, this is going to be there in the exam. But significant influence means I can influence their business decisions, business management, but I don't control it. Ultimately, it is on them. How do they do things?
It should be 26%, or 26 to 50. Because if you have 26% of share, then probably you have a say in the board, because 3/4 of majority won't be there because you're having 26%.
Correct. So that is why they say I have significant influence, right? And if you have more than 50%, they say you have a control, right? Now there could be cases where you have less than 50% also, but it is still considered as significant control for some reason. And there could be other cases as well wherein I have more than 50% also, yet I don't have control.
Okay. They are specifics. These are the specific cases, right?
Now, example of this would be if you had a company in North Korea, which is a dictator country, right?
Yeah.
So there you could have 99% of investment also, yet not have a control. So you will either put it under passive investments or you will put it under active but minority. So accounting treatment is determined based on the nature of the investment and lot many other conditions. Good with this? Understanding how the percentages are to be taken? Those are not hard stops. You still have to look at the details of the investment. Good. Now generally if it is more than 50%, you call them as subsidiary.
More than 50%.
Yeah.
Generally if you have more than 50%, you call them subsidiary. If it is less than 50%, somewhere between 20 and 50, you call them associates or affiliates. Then there are many other avenues of investment like joint ventures and all. We are not touching
SPVs.
Special purpose vehicles too. Now we'll talk about IFRS first. So under passive investment categories, there are 3 types of investment accounting possible. One is for the trading securities, right? So generally your market traded shares, जो stock market में होता है. Then you can have held to maturity. Some investment, like bonds. So 30-year bond, infrastructure bond. आज मैंने लिया, I'm gonna continue to hold it.
Only debts, no equity.
Huh?
Only
Yeah,
debts.
generally equities don't have maturity, right? So debentures, bonds, loans, only
What's
those
a
kind of.
debenture?
It's another kind of a loan instrument only,
Okay.
wherein you pay money to the company. They issue a certificate saying that okay, you have given me this money, and it also comes with a
Promissory note.
interest rate.
Mm.
Okay, so
Yeah.
I earn an interest.
Yeah, so I'll pay, like company will pay you periodically interest. It could be annual, half yearly, whatever.
Similar
there'll
to an
be-
FD, but rather than a bank, you invest it
In
in
a
a
company.
company.
Yeah.
Correct.
That's a preferential in the sense that they get preference over equity. If the company gets
When the
bankrupt,
yeah.
then this thing, what do you call?
Debentures.
So
Debentures are given
there is
preference.
like when the company goes into liquidation, there is a order in which the payments are made.
Okay.
So debentures generally come before equity.
Equity. Okay.
But debentures से पहले creditors आते हैं, like regular trade creditors. So there is a specific order of things how you
Which the
pay.
catches you.
Right?
Okay.
Now we talked about trading, we talked about held to maturity, everything else available for sale. What that means is that I'm not actively trading these shares or investments, but I don't intend to hold them unto maturity also. When I find a good price, I might sell it, right? So intentions again. Generally, they also give you a timeline along with this. So generally, 0 to 90 days is considered a trading securities.
Okay.
But it depends on the intention also. Do I intend to hold it only up to 90 days, or I intend to hold it after that as well? After that, I'll call it as AFS. But if I intend to do before that,
Trading.
I'll call it trading. But
Okay.
something I classified as AFS, but tomorrow if I think that no, yaar, I need to sell it off, that doesn't change the accounting as such. It will still accounted as AFS only.
Okay.
But you can sell it.
Yeah, you can sell it.
Okay.
So again, intention.
Mhm.
So intention was to hold it for more than 90 days. I considered it as AFS and do it. But doesn't stop me from selling it if the
If
change in
something emergency
intention.
happens, you can always sell it off.
Yeah.
Right. So all these investments are strategic investments, right? And I just don't know, like invest in चलो आज राहुल की कंपनी में invest करते हैं, आज वैष्णवी की कंपनी में invest करते हैं. It doesn't happen like that. There are strategic investment and there are intentions behind making those investments. You don't make arbit CP type arbit investments. Okay. So moving on from there, when we talk about 20 to 50% investment, there is something called as equity method.
Okay.
And if it is more than 50%, you come to consolidation. So we'll look at each of these different type of investment accounting one by one. So first we'll talk about the passive investment, right? Now let's take a quick example. I bought some shares for, say, cost was 100 and this was bought in January. Okay. Now on 31st March, which is my period closing date, or like my year end, whatever, any reporting date basically. Generally these revaluation happens on a reporting date,
Okay.
right? I don't keep doing it on a daily basis or hourly basis.
Okay.
I do generally when I'm doing a reporting, right? So on 31st March, say the value is 110. Let's call it as like fair market value, or I don't know what, fair value, right? Now on 1st of April, I sold it for, let's say, 105. Okay. Now, if I am talking about trading, how the things are going to be, if I am talking about AFS, available for sale, how the accounting is going to be. So first we talk about balance sheet here, and then we talk about income statement here. Not touching cash flows. Cash flows are simple thing. This is a outflow, this is the inflow. Both are investing activities. Good? Alright. So, cost 100. So on 1st Jan, how much is going to be in my balance sheet? I'm talking about trading at this time. So I'll have an investment of plus 100.
Plus
Good?
Yeah.
Coming to 31st March, The fair value is now 110. So I have a gain of 10, right? So think of it, if it is trading method, it is in income. Income in the sense, if there is any change, I put it into P&L. Any change in the value, I put it into profit and loss account, right? If it happens to be AFS,
New pocket.
and this gain I am talking about is unrealized gain. So until I sell it, all these revaluations are unrealized.
Gain or loss, right? Anything, right?
Gain or loss, yeah. Okay. Now coming to AFS, it goes through something called as OCI.
AOC, a new pocket.
Now, what is OCI? I'll explain it quickly. So when I put something in P&L or income statement, it goes into retained earning, and from retained earning it goes into
Balance sheet.
shareholders equity, right? But if it is OCI, the sequence is little different. It is OCI first and then directly into shareholder equity. So it does not go into retained earning, it doesn't show as part of my net income and all that. So you're basically skipping that altogether. Good with that?
Okay.
Right. So now I have a gain of 10. As I said, for trading method, it's all P&L. So what I do is, income statement,
Plus
I
10.
have a gain, unrealized gain of
10.
10. And it goes and sits where? Add to my investment.
Investment,
So my investment becomes plus 10, it's 110 now.
Won't it go to retain earning?
यहाँ से जाएगा ना? So
ठीक है,
it's a gain in P&L.
बैलेंस हो जाएगा, बैलेंस हो जाएगा. Okay.
Gain in P&L, retained earning and then shareholder equity.
It will balance.
Good with that? Now, coming to 1st April, it's only 105 now, I sold it. Right? So what happens to my investment here?
Minus 5. Minus 105.
Why 105? I have recorded it as 110 now. I will have minus 110.
Yeah, my 110 will completely disappear and then
0.
that will become 0.
Right? Now, what happens on my income statement?
Minus 5.
This will become minus 5.
नहीं नहीं plus 105.
Income statement.
ये minus 5 होगा ना?
This plus 10, right? This will go off. This was an unrealized gain, right? So this will go off.
It will become minus 5.
In this one, in trading, you already inflated your investment to 110.
Okay.
Recognize that gain. So now, let's say your actual cost is 110.
Minus 5.
Then
Sold
it
it
should
for
be
505, you have a 5 rupees loss.
5 rupees also. Okay, that's all. Minus 5.
What's the net impact on P&L?
Plus 5.
That's fine.
Good with that? But though it is reported in different periods.
Okay.
Moving on. If it happened to be a
AFS.
AFS investment on 1st of January. Good with that? Coming to 31st March, fair value is now 110. What do I do?
Investment plus 10.
That will again be implemented by 10. And now instead of reporting it on IS, we will report it on OCI.
Because it's on the liability side. I'm just putting it. Otherwise, you can always say.
It's a
OCI.
is it a contra?
No, it's not. contra.
It's in the
So if
liability
this was,
side.
let's say, assets.
Shareholders equity.
This is say liability side.
Okay.
On the liability side under shareholder
Shareholder
equity,
equity.
you will have OCI.
Okay. Okay.
10.
But
Income statement,
OCI.
no impact.
it skips. Good?
No unrealized.
कुछ भी नहीं. Directly skips on and goes on to OCI and investment. Okay with that? Moving on,
So
First effect.
105. What do I do with the investments?
Go off.
It has to be removed. Here we will recognize
OCI.
minus 5.
Plus
It has to be calculated.
Gain,
It's a loss of 5.
5.
gain of 5, loss of 5.
Gain of 5.
So why do we actually remove that 10 there? Actually?
OCI? So in AFS, you basically remove that unrealized effect. You bring it back
Okay.
to the cost.
Okay.
So think of it. Before I did this 110, first I do a reversal of this 10.
Okay.
So how much is my cost now?
100.
100 back to 100, right? So how much is my gain?
5.
5.
What is the net impact?
Plus 5.
Good.
Okay.
So there is no ultimate end impact of this, but the period is different. You had plus 10 here, minus 5 here. You had 0 here, you had plus 5 here.
The
So
stage
whenever you
from which we are actually trying to realize the gain or loss while selling is different. There we did it from 110, here we are doing it from 100.
Whenever you
This
realize,
one?
then only you put entry in income statement in case of AFS.
Correct.
Otherwise, there is no entry in AFS.
In P&L.
In P&L.
Correct, in income statement. So, good with this?
Yeah.
No confusions? Alright. So these are the first two passive methods.
And in trading account, there is no effect in liability side. Whereas in AFS, there is an effect in liability side. We got a new entry OCI.
OCA. There will be impact of retained earning here, but otherwise no. Good with this? So these are two methods, trading and AFS under passive investments. This is another one. held to maturity. Trading and AFS are the two methods in the passive, right? The next one is we are held to maturity, which is pretty simple. Whatever happens doesn't matter. You put it on cost, it remains on cost. No revaluation. So there will not be anything on 31st March.
Okay.
Held to maturity, put it on cost. When you sell it, you have a 5 rupees gain. You will recognize.
Yeah, but there are some bonds which are available on discount. What is the fact?
That's a very different. That's a different kind of accounting.
And when say I think I just read some question. When this interest is amortized, then is there a net benefit to the company or not?
Which interest?
The interest rate or the discount is amortized. Is there a benefit to the company or not? I think there is a benefit to the company. With
There's a question.
Yeah.
Where?
Book.
Book mein hoga. So the thing is that this amortization of discounts and all, yes, it falls into the held to maturity thing, and there is a thought around how do you account for it.
I hope that
You
won't
might
come in the
not
paper.
It's beyond the
I hope.
scope, right?
I hope that won't come in the paper.
You might not. They might not ask.
That's okay.
और पूछा भी ना तो एक 15 CA को छोड़ दो. इनफैक्ट हम में से भी कुछ को नहीं आता होगा because we are not in touch with these accounting things for a long time. We've gone into different directions. So assume nobody would know the answer.
Then we are safe.
So we'll skip to that. Alright, so moving on, now we are talking about two different kind of methods. One is equity and one is consolidation.
Market कहते हैं उसको ना?
What?
One is market method, the other equity method.
No, I think what you're referring is different kind of valuations. So there are three different kind of valuation which he has mentioned. One is called as mark to market. One is called as mark to model.
Equity.
Yeah, all this where is it?
And next one is mark to make believe.
You didn't teach all this in the class, no?
It's not important.
Leave it.
The thing is that this one is basically where you have readily available information from a market, independent information, like your share prices from the stock market. So this is that method. Now you use this information in all these accountings. Then there is mark to model where I don't have this information available because let's say these securities aren't traded. So what you do is you build a in-house model to do a valuation with observable input. It's not important, but that's a classification.
Venda.
So observable input is like what things you are using in this model are, let's say, taken from the market. Value is not available, but inputs I can bring it from the market, like market data rather, right? The interest rates, the stock market index and all that. So that information is available. I use that to do my valuation. Now make believe. Last one is basically when I use model,
Okay.
but I use unobservable input.
Okay.
So
Assumptions
putting
then.
yeah, exactly. I'm putting my own assumption, putting my own value. So
Mhm.
that's a third kind of valuation.
Okay.
They won't
So-
ask now.
From
He's not even touched upon this now.
so first one is most reliable. This is in reliability order basically. First one is most reliable, last one is least. Now moving on to equity method. Generally we are saying 20 to 50% investment and we use equity method. Now in equity method the idea is that basically you take your share. When you're preparing your financial statement, take the percentage from the other person's balance sheet and you prepare your financials. Now, there are three kind of changes that happens in the value. So one is basically my share in your net income. Let's say in this case P bought shares of S and 20% or say 25%. Okay. So share in net income of S and P's share. Now all this equity method is only for the purchaser because they have made the investment, right? So P purchaser has made that investment. Now P's share in net income of S. There has to be something done about it. Then P's share in dividend paid by S. Okay? And the third kind is the actual investment value change in
Fair enough.
fair value of
Yes.
investment, which is S. Okay? So these are three kind of things which you need to be cognizant about. That how do you do this treatment? Now, for example, here, let's say we invested for 25%, we paid, let's say $100. Okay? And I think the example has some value, so I can pick it right from there only, rather than devising my own numbers. Alright, so it says Priyanka Corporation purchased rupees 50 million of Saurabh's company's outstanding common stock. So I bought it for 50 million. Okay? How much did I buy? The investment is Priyanka intends to hold the stock as long-term investment. This investment is 25% of Saurabh's outstanding stock. So that day my valuation would be what? 200?
200.
Right? Next one. During the following year, Saurabh has net income of 28 million. So net income of S is 28 million. Okay? Then paid cash dividend of 12 million. Dividend. Okay? The next one says Saurabh's year-end market capitalization is 240. So market cap is 240 million. Okay? Good with this?
Yes.
Now, if I had to account for it as AFS, available for sale, what would I do? My balance sheet and
Income
income
statement.
statement. 50
Plus
Investment.
Investment.
50.
Now, next year I have a share of the S's net income is 28 million. What do I do with this?
That will go in income statement 7 because
We're
1/4.
talking about available for sale, and we just did an
Yeah, that will
example on
actually. We'll
Okay,
just put
OC.
it on the income
It's
statement
liability
of.
side, OCI.
We'll not do anything with that. We'll not do
Unless
anything.
you realize it.
We'll
We'll
not
not
do
do anything
anything
with
with that. What did we talk? What adjustment did we do in last one? We did adjustment for change in fair value,
We did, yeah, for changing fair value for AFS.
right?
Yeah.
We did not use the
In the net income. at all.
whatever they earned. I don't care.
Yeah, yeah, exactly.
I'm only concerned about how much is my investment worth, and if they pay me any dividend, of course. Correct?
Okay.
So out of these three things, only this and this
Okay.
is important for AFS.
Trading, both, right? The same.
Second and third.
In case of trading, second and third again, right?
उल्टा बोल रहे हो भाई
Rating would be different. Yeah, these are the
भाई,
things
उल्टा
which will
बोल
be
रहे हो।
important.
हाँ.
AFS में क्योंकि तुम्हारा substantial control है, you will get a share in their net income also.
We are not getting
What
the
is it?
AFS.
You will get a share in the net income also because
That's
you have
only
substantial
equity
control.
method.
No, she's saying trading.
Trading method I said.
नहीं, equity method में नहीं होगा तुम्हारा. You should
Equity
get this.
method में you don't consider. Oh, we haven't reached equity method yet. We'll talk about equity.
Okay, you wrote over there, na?
I wrote AFS. So we are coming to that. We are still talking about. We took an example. We are talking about what if it was AFS.
AFS.
How is the thing? How are things gonna be? So only two things considered in AFS. Now investment is 50, 28 million. Nothing to be done for this.
Nothing to be done.
Yeah.
Now dividend. 12 million total dividend paid. How much is my share?
1/4.
3 million.
3 million only, right? Now what do I do with this 3 million? It is like this. I made an investment and you kind of paid a part of it back to me.
So,
What do I do?
decrease the investment.
Exactly. So minus 3.
3.
Okay.
Good with this?
Yes.
Dividend received. Okay? And of course there will be a plus cash there. Good with that? Next one is market capitalization now is 240 million. My share is 60 million. How much was my investment? 50 million. Or even if you say 47, still the thing is that it is after my dividend payment.
Fair enough.
So this valuation we talk about based on the original cost. Now the investment is worth what? 60 million.
60 million.
How much did I buy it for? 50
50
million.
million.
Right? So 10 rupees increase.
3 already
What do I
taken.
do in AFS?
3 we have already accounted for. 7.
3 is separate. 3 is dividend.
Okay.
This is after dividend.
Hmm.
So even after you have considered the impact of the dividend, this is after that. 240 is the closing price.
This is unrealized, na? Still unrealized.
Unrealized.
Still
Yes.
unrealized.
You can
Yes.
OCI 10.
So now we are doing all this for AFS only, right? We have still not gotten to the
No, we
equity
haven't
part.
got it.
Okay.
57.
Good with this? No issues there? Move on to the next one. That is equity.
This dividend receipt, should it not be on this side? This is the asset part of it, no?
नहीं,
The
the right side is asset.
हाँ.
हाँ. So you decrease the investment, na?
So, yeah. Okay.
Actually, can you pause this?